Hello and welcome. We're here at Holistic Investments, and I'm your host, Konstantin Kogan. I'm delighted to have an amazing guest today, who's also a friend, Gil Rosen, who's a managing partner at Blockchain Builders Fund. Hi, Gil.
Hi, great to speak again, Konstantin. Pleasure is mine.
Likewise, it's we've been planning this for a while, and I'm happy finally, to have you on the show. Traditionally, I'm throwing a legal disclaimer so that I cannot be blamed by SEC or any other legislators. So this content is for informational purposes only. You should not construe any such information or any other material as legal, tax, investment, financial, or any other advice. I learned by heart so far, so it's good. I'm hope any regulators are happy. Now we can talk about everything we want. Um, so you have a really, really interesting story, how you started, as an engineer, then you had several businesses, you consulted a lot, you founded a lot of things, and then you ended up in a Stanford blockchain community, of leaders and lecturers, and now you're running a fund, right? So, and beyond the fact that you're also co-teaching, you have a course and many other things. So first, maybe tell us a little bit more, how did you start your career and what was this pivoting point in your career where you decided, you know what, this is it. I want to eat the orange pill. Crypto is my thing.
Orange, I think it's very red. Very, very red.
Okay.
I mean, I'm older than some, younger than others. But I'm a computer and electrical engineer originally. Did my undergrad at UCLA, and my first job was actually as an IC designer, working in hardware, designing high power, high voltage chips that at the time were going to be used in power supplies and electric cars and things like that. So it's been interesting seeing the relevance of hardware chips now as we look at ASICs in crypto mining and GPUs for AI and ZK proofs and the like. But no, my start was as an engineer, a hardware engineer. I learned very quickly that 20 years ago, I'm dating myself now, you couldn't really do well in hardware. Doing IC design, learned quickly that there was not a whole lot of entrepreneurship in hardware at the time. It was before you could have contract designers and iterate quickly. So after a couple of years, I was given the advice at the time that in hardware they give you just enough money to keep you in your little hole. So I left and transitioned into data infrastructure. I worked for a company called Informatica that was at the time building what was very boring pipes, data pipes, and ETL for data integration. But ultimately, data became the crux of the big data revolution and tech revolution overall. So I was working as a consultant implementing big data platforms before it was sexy in 2008. Moved to London with them and post-crisis wasn't getting the raises and promotions that I wanted, so I left and started a consulting business with a friend. Made every mistake, learning how to not start a company. We did all right. We were building data platforms for Electrolux and Rolls-Royce, but it's always good to learn how not to do things. A couple years later, we split and I started another company building data infrastructure and big data platforms, and ended up getting a business partner, Mehtav Harpaz, and 2 years 2 years in, and then we scaled that to a team of 100, 10 million ARR, and we're building enterprise data platforms and distributed compute platforms for the IRS, JP Morgan, Morgan Stanley, British Petroleum, Rolls-Royce, and a whole bunch of others. So that was a ton of fun, learning how to take tech infrastructure and actually build something useful and valuable for the real world. And that became my primary skill set. I was founder, CEO, then became president, and really focused on a lot of the technology aspects of things. We sold that to an AI digital marketing company called NG Data, And that kind of gave me this flip side of looking at the consumer side of how do you build customer-centric platforms, how do you look and track customer behavior, and thinking about growth, customer engagement overall, which now I think both of those worlds really apply really well to blockchain, which is technology infrastructure and the consumer side of consumer growth and network effect platforms. Company was doing well. I was insecure about not having a big name behind me and not knowing what I didn't know. So I went to Stanford for business school. That was an amazing experience. I got to learn the Silicon Valley way of building startups and kind of the process of Silicon Valley does a very good job of systematizing company building. Mm-hmm. And wanted to be a founder yet again. And the girl I was dating at the time basically let me know that if I were to start another company, she would leave me. So I promptly thought I would become an investor. Well, you can only have one wife, and if you have a company, it's hard for that to be not the company. So I decided to start a fund, thinking that would be an easier way to support founders and be in the ecosystem. And kind of that's the loose way of how I ended up here. Blockchain specifically was in 2016. I met someone who I ended up dating, so it was love that actually brought me into blockchain. And she had been the ex-head of marketing PR for Mt. Gox when it went through its hack. I met her afterwards. She had a little bit of PTSD from that. But I kind of learned about blockchain back in 2016 from her and got really deep into what is this this new paradigm for technology infrastructure that is like public digital infrastructure. At the time, I was looking at it more as a form of like anyone could build a marketplace and anything can be a marketplace and you could have composability of it. And later I got to see blockchain as, I really think of blockchain as public digital infrastructure. It is, if you could automate co-ops and have multiple, groups of people owning and managing technology and applications, that is in essence what blockchain is. And what that then empowers is transformative. And I think much of digital infrastructure is owned by 4 or 5 monopolies. And most of our experience within the digital world is controlled by these 4 or 5 monopolies. I think that's bad for innovation. I think it's bad for humanity. I think it's dangerous in a world of AI. And I think like blockchain is potentially the way out of that, where we can kind of reclaim ownership of these digital commons. So that's how I got into blockchain.
So quick question, are you still with the same partner or not?
No, we split after 2018. I blame the price of Bitcoin. We were running a little hedge fund together as well and investing in ICOs back in the day. I had a lot of fun then, but then unfortunately the relationship and blockchain did not fare well. The relationship ended. I actually took a break from blockchain as well because at the time in 2018, I think I was frustrated by the promise of blockchain and the reality of the technology itself, which in 2018 ultimately wasn't viable to build most of the things that people were promising that they were going to build. But by definition, blockchain are these network effect technology platforms. If you look at any network effects platforms in the Web 2 space, any marketplace, DoorDash, Uber, social media, like they optimize user experience to the microsecond. Right, TikTok is like literally, what are you doing in this split second, a little longer, a little less of watching a video, and that curates your experience. And that user experience needs to be really smooth and seamless to create these network effects. Blockchain is the opposite of that, or was until about 12 months ago, where like it's hard to use, it's slow, it was expensive, it's hard to build on. Like everything you could possibly want to do has dozens of friction points, which really kill network effects unless there are these absolutely insane use cases that have no alternative, like USDT, USDC, that sort of like, hedge against inflation because your money's all going to disappear. I think those are the use cases that we're willing to accept such challenges in technology, but otherwise, like that was basically what I thought was missing. And then I came back full time in 21 when I started to see the technology maturing and people really building infrastructure to solve all of these frictions.
Interesting. So now let's jump into the Blockchain Builders Fund, right? So essentially, like it comprises of Stanford blockchain community leaders and lecturers. You're working together with like all the students, alumni, like and you kind of created this ecosystem of the best people who are actually passionate about Web3 and blockchain. And so explain us a little bit, how does it work? What's your investment thesis?
At our core, our investment thesis is we want to drive blockchain adoption. And when we started the fund about a year ago, we were really thinking about, okay, what are these friction points around scalability, cost, usability, developer experience, interoperability, and that we want to invest in projects that were creating new categories and enabling new use cases, right? If you're building something that is 1x, 2x, 5x, 10x better than the rest, there's enough money in blockchain that people will throw at competitors to quickly build something that is kind of as good, and now you're fragmenting this already small market. Like there aren't a whole lot of like real use cases right now in blockchain that are active. But if you build something that's 1,000 times better, now you fundamentally change what's possible, and that's really been kind of the driving premise behind Blockchain Builders Fund, is how do we support and drive adoption through these category definers. So we invest heavily on the infrastructure side, but we're also looking at, okay, well, what are the use cases that are going to be driving adoption? And if we see someone that has compelling experience in a given sector, that we feel like they can actually be the ones to win and bring blockchain adoption into their sector, we'll invest in them as well. In order to do that, I've been an angel investor for 7 years, something like that. I think the best way to learn is through mistakes, unfortunately. So I've certainly made my fair share of mistakes in investing. I think that the hardest challenges are just things that you don't know, and you want to start with good founders. When I was investing in blockchain in 2016, when we met in 17, 18, I was chasing after deals, hoping I could get in and convincing founders that they should take my money. But realistically, like by the time I would learn about a great deal, it was going to go public soon. Things were fairly mature down the line, and the value that I was able to add was less meaningful and material. And then when projects go public, especially if they're pre-product market fit, which I think historically most of blockchain projects, especially in the 17, 18 cycle, but even in the 21, 22 cycle, they were basically going public, pre-product market fit, and then everything is basically based on hype. And that's kind of comparable to if you look at public markets for biotech or regular tech, right? If you have no consistent revenues and you're just a technology and a promise, your value, your market cap is based on hype and is highly volatile and fluctuates. And it takes time to build things. So I guess to get back to like what I wasn't investing in, what we've tried to do is to really cultivate community for passionate and deeply technical and innovative founders. And the place to start that was Stanford, or was and is Stanford, and that's where I went to business school, and I got a degree in public policy as well. And it's really this heart of innovation. Our long-term vision is to support university research and accelerators globally, and to support top founders globally. But we wanted to start where we had a competitive advantage because we're from there, and where there's a really strong kind of conflux of technology, business, law, and a founder mindset. And that's why there's been so much innovation that's really come out of Stanford, and there's been probably like a dozen plus, blockchain unicorns alone that have come out of Stanford. So we started kind of all of these community organizations when I was a student there still, and that's the accelerator, which is part of the blockchain club. We then started an alumni blockchain club, and now the accelerator is kind of supported by both of those. It's a completely free program, and we support any blockchain founder that at least has a Stanford student or alum on the founding team over 5 months, really in every way. There's zero capital given, there's zero equity taken, completely free and supportive program. We decided to co-teach a class on blockchain entrepreneurship because we want to inspire new founders to build in the space. So we bring in thought leaders, whether it was Chris Dixon, Chris Larson, Hasib Qureshi from Dragonfly, Avichal from Electric, Gavin Wood, right? So just like thought leaders to talk about different topics of where blockchain can be applied so that people would think about kind of what types of companies they could build, then hopefully push them through the accelerator. And then we started an event series to be like this nexus for thought leadership. Stanford has what used to be the Stanford Blockchain Conference and then became the Science of Blockchain Conference, which is like the premier academic conference, which is amazing. It can also put you to sleep if you're not really into academic papers. So we wanted to take like the same types of talks and speakers and have them really create a conference where they could share their perspectives at a level that was still technical, but more aimed at founders, engineers, versus like PhD academics and researchers. And we've run 4 or 5 events like that, both last year at SBC, at ETH Denver, in Turkey, over at DevConnect. We're doing one at ETHCC, and then we've got another one in August. And the idea there is really like, how do we bring in the founders and CEOs of Near, Polygon, Starkware, Espresso, Risk Zero, Layer Zero, Aptos. How do we bring all of them in one place to talk about kind of what they're doing, to have this nexus and this brain trust, and then alongside that have kind of these new founders all interacting together. So that's like the communities that we've built. They're really synergistic. They're really supportive. And then our hope is to kind of fund teams that believe that we've added value to them and can add value to them.
So the short version, to even apply for the program, for the accelerator program, you need to be an alumni, right, or a student, right, in Stanford. So let's imagine let's imagine you have exceptional guys, I don't know, from Berkeley, UCLA, or anywhere else other Ivy League. So would you, as an accelerator, obviously probably it's not the fit, but what about the fund? Are you still able to invest, outside?
Yeah, we are. We've got a team, QED, that's built initially they start off as a cross-chain layer 2 that was running at like 300,000 transactions per second. They then decided to focus on the Bitcoin ecosystem, like super sharp founders, like recursive ZK proofs, kind of underpinning the platform. And yeah, we tracked them and really believed in the founding team for a while. And at some point, we felt that not only did we really believe in what they were building, we could also add value and support. So we invested in them, and we've certainly been looking at a number of other projects that are kind of not Stanford specific. It's a lot easier when you work with someone for 6 months because you've been in an accelerator to know them really well. But again, our aim is really to support the overall blockchain ecosystem. And while the fund has certainly started with Stanford and it's still much of our deal flow and where we spend our time now, our hope in the coming years is to expand beyond that. I mean, there are amazing ecosystems at other universities as well. Berkeley, obviously, Cornell, UPenn, MIT, Waterloo. So there's a number of other universities within the US, and then obviously internationally, there are healthy blockchain ecosystems down in Buenos Aires, over in Israel, in Istanbul, etc., Oxford and Cambridge. So.
Nice. So if you were to describe something like the trends that you're really bullish on, right? So for example, some of the project that would apply and that would have a higher chances right now to be noticed by your fund, what would that be? Like the top 3?
I think that there's broadly 2 or 3 categories that we really believe in. Number one is are you a category definer in one way or another, right? When we looked at Modulus Labs that was doing ZKML, the average overhead for building a proof for a machine learning model is 10,000x, and they were bringing it down to 50, now 20, right? So it's if you were able to bring the overhead of proving that a specific model was used to parity, perhaps, with just like executing. Now that becomes viable. And if proof of model is viable, there's dozens of use cases, not literally thousands of use cases in AI where you want to make sure that the model you're looking at is the model that you have, and WorldCoin is one of them, and that's one of their customers, where if you're running a facial recognition model on your phone, you want to make sure that it's the right one and it's not some hack version that's scanning your face and stealing your iris data. So I think step one is like, are you 1,000 times better in something? Zero gravity is a data availability layer that, again, is like 1,000 times faster than the standard. So if you want to have responsive on-chain games, if you want to be running, again, AI models, like you need to have fast throughput. Nexus Labs is, they want to be a terahertz ZK proof generation. So if you want to provide ZK proofs for the internet and have a verifiable like digital world period, how do you do that? You need like infinite scalability. So like these are some of the companies that we've invested in on the infrastructure side, and a lot of it really comes down to like, are you 1,000 times better, faster, 10,000 times than the standard that enables this new use case? And that's really heavily on the infrastructure side of things. We're working with another team, TurboVM, that's building like a parallel EVM stack, right? And again, it's you want to be able to have it's kind of like Monad as an L2, but as a stack, and what that then enables. So like that infrastructure is one. Another is the intersection of AI and blockchain. We could probably get into that a little bit later in more depth, but I think AI will break the world. And I think blockchain can help fix that. And I don't think it's like AI is evil. I'm not a decelerationist. It's the opposite. I think we need to have the right digital infrastructure in place that allows us to own our data, own our identities, and have verifiability and trust on our digital platforms such that we can have as much innovation in AI as we want. And instead of like having to worry about AGI models that can kind of penetrate. I know there's this book Nexus by Aziz, I'm forgetting, Naam Aziz or something like that, where he presents a future where these super intelligent AI models can go and hack into completely everything, or Skynet and or the Matrix, so to speak. Like there are all these examples of these worlds where if there is a super intelligent AI, can it go and take control over our digital platforms? And yes, that's true if there's no trust, verifiability, cryptography built into these things. So I think like the intersection of blockchain and AI is really interesting. There are a bunch of other kind of use cases there as well. And then the last is really blockchain adoption, and this one is a lot harder. And it's harder because adoption period of any company, Web 2 or Web 3, is hard, right? You need to be creating value. Blockchain has a little bit of a stigma to it after the crash in.
So let me ask you your stance on the OpenAI, right? So like since we're touching this topic, right? Like we're just a little bit like going on tangent, like so. There is a huge development right now, like of like this movement where like some of the folks like try to like say like, okay, we don't want to stop, as you mentioned, we don't want to stop
Right.
the process. We understand it's important for the humanity, but at the same time, we don't want to over-regulate it, right? At the same time, we need to create a consortium, some kind of working group to make sure that like it's done right, because it can do a lot of damage if we completely like unleash the Kraken, right? Which we can, as you mentioned, there's a lot of potential risks. So where do you see this on this intersection of AI, like where the blockchain actually stands?
So it's the accelerationists versus decelerationist, and Vitalik has a really interesting kind of paper that he wrote on this, and it was validating because I was having similar thoughts at the time. But my view is not that we should be a decelerationist. I think whoever ends up, I think if we were to prevent the advance of AI innovation, other people would advance, and then we would be at a disadvantage in some way. So unfortunately, it is a race in some sense. I think the more important thing is what is it that AI can run on, and what is the governance that we have on AI. And to me, I think we need cryptography and trust built into our everyday digital platforms, and that we don't have. Right? Most of us don't even really use public digital platforms anymore. I think I mentioned this earlier. We're using these private digital platforms. All of our data is Google, Meta, TikTok, Microsoft, etc. So if all of our data is stored there and an AI algorithm kind of runs rampant, it just has access to everything, right? There was the example of, do you the castle with the moat, which is like the VPN strategy. You've got a company. If you like hack through the company's VPN, if you can get past that moat, now you have access to everything that's in the castle and all of its spoils and all of people's data. Or does like literally every piece of data is that encrypted and have its own kind of moat? And is it redundantly being stored and synchronized continuously? And to me, like that's ultimately what blockchain is. It's this trusted layer of redundant and constantly verified digital infrastructure layer. And to me, like if AI needs to run on, if AI needs to interact with that type of a layer, there are a lot more safety guards in place, because it can't just access all of Google's data now, right? It needs to be able to penetrate like every single. This is malevolent AI in some sort of dystopic future. So ultimately, what I'm getting at is that I think we do need governance on AI, but not from a slowing it down, from a verifiability perspective. Like, what are the models that we're running? What were they trained on? These are all things that we should be keeping track of. And when you interact with an AI, you should be able to know. And we're already starting to see legislation in this. So New York passed legislation a couple of years ago, before OpenAI was even a thing, around HR and AI, right? And can you use AI models for hiring purposes? And the legislation basically says that if you do, you need to provide information on all the parameters that are being used, etc. So what I want to see, to me, like the safe future is for blockchain to be legislated as the layer for compliance and governance of AI models. Around every AI model should have an ID associated with it. That ID should keep track of the data sets that were used to train it. Was it trained on a data set that shows that it doesn't have bias, it's not racist, it's not sexist, or causing some sort of undue harm, and every time you like have an upgrade, you need a regression test. And this isn't new. We have similar things in finance already, right? There's Sarbanes-Oxley and Basel II compliance that force financial institutions to keep track of the metadata of the data pipelines that they're running their transactions through. And in a similar way, I think we need this with AI models, and I view blockchain as kind of an optimal place for that. So to make a short story long, which is something I'm good at, the answer is yes. I believe that I don't believe we should be decelerating. I think blockchain can serve as this layer of governance and trust to allow us to have greater innovation in AI, and to reach a state where we have kind of AI agents proliferating and interacting with us.
Yeah, there's definitely a lot of applications, from starting from data integrity and security to decentralized, like just distributed computation, which is like very important to make sure that the computation of the nodes will not be concentrated in only like, the big economies, which seems like it's also going to be like, the question is like now, like the richest economies, they technically, like you're saying, the compute is the new gold, right? So we have like US is one of the examples, right? We have more money than other countries. So right now we're building the infrastructure that actually potentially can dominate in the future, like, and leave others like aside, right? Same as like, let's say China, India, many other like, emerging big economies, right? So to improve the transparency and trust, like, we need to make it like verifiable, auditable, like, and making sure that we can like collectively as a humankind trust it, right? So there's a lot of like challenging issues, but that's a separate podcast. We can do only about that, right? Coming back to investment thesis. So like I'm very bullish on the cross section of like yeah, and mention as well. But you mentioned like the three, like you have to be a leader in the category. Obviously, you have to disintermediate like someone. You have to show the growth. You have to show potential.
Right.
Everything is clear so far. Now, like let's imagine like you already like identify this. Like so maybe one or two kind of case studies of your recent investments that you can share. Like how did you approach, well, like for example, naming the company if you can, right? And then how do you approach the due diligence process? Like, what were your 3 to 5 major parameters why you thought, okay, well, this is potentially a winner?
So due diligence is a lot easier for us because we're running an accelerator supporting teams, right?
Hmm.
So we're literally working with them on a daily basis or sorry, a weekly basis for 5 months. So we get to know them intimately well. And ultimately, there's two types of projects. There's projects that are more on the infrastructure side of things, and there are projects that are more on like the use cases side of things, right? This is real world use cases, this is real world assets, this is DePIN, this is DeFi in many ways. Are you providing some sort of value to someone in the real world, or are you creating the infrastructure upon which applications are being built? If we're on the infrastructure side of things, where we're sitting and we're investing early and we're incubating early companies in the accelerator, the first and foremost is this technology side of things. Like, is there some sort of like true technical innovation, and is this the team that can not only innovate but continue to innovate and continue to succeed? That's like probably the most important one. Next is the founder someone who is self-aware, teachable, and open, or do they think that they know what's best and don't necessarily learn from their mistakes? And I'm not saying people should always follow our advice. I always caveat that the opinions are like assholes. Everyone has them. Some smell more than others. But it's like they should at least take it into consideration and think about it. So like, is the founder and founding team open? Can they learn to run a company, or do they have someone that is able to learn to run a company? When I was doing Web2 investing, I would always look for skill sets on a team. You need a technical skill set, you need a business skill set, and you need sector skill set. So kind of those are the first, the primary ones are like, is there true innovation there? Do they have someone that on the team that can run this company, or can the team like learn how to run and manage a team and grow? And then the third is from a sector perspective. This is interesting because in blockchain, you don't necessarily have markets, especially if you're building an infrastructure. So I think it's important to think about go to market, but that often at the stage that we're looking at things is less critical. We assume that someone can potentially bring someone on board from that, but there needs to be at least a set of use cases that this can be used for, whether they're purely crypto use cases, DeFi, DEXs, games, etc., or real world use cases in one way or another. If we look at projects that are more, this is going to be something in the real world, right? And whether that's, we invested in a company called Trips that's kind of doing like IP management and allowing creators, YouTube creators, to sell future earnings. Like the founder himself has a deep history in this sector, in the content creator sector, in the like IP rights management industry. There's another team, FXPay, that it was an early investment of ours, where they were doing kind of cross-border stablecoin payments, and the founder was the ex-VP of finance for Colombia, right? It's someone that understands the regulatory aspect of things, deeply understands business and commerce. So I think it's critical to have, and those are really like exciting companies, because ultimately people need to use blockchain in the real world. It's just hard, and that takes a lot longer to have a return and to have growth, though actually Trips and FXPay have been doing quite well.
Mm-hmm.
I think we see cycles in like infrastructure tend to be much faster. It's like, okay, 2-3 years, you've got a TGE event. That's great. Ultimately, you still need like longevity and adoption.
100%. So in your case, okay, so you basically you're already working with some of the companies for 5 months. So obviously, it's very different, right? So it's already you know them in and out. So, but it like the short version of the answer, please. So, what is the moment when you actually know like that you want to deploy capital? Was this like at the end of the cycle, at the after 5 months, or it's like from the day one or first month?
It's a mix. It really depends on the team. There are teams that we see and like relatively quickly, we know that we want to back this founder, and there are teams that um, uh, we want to work with them a bit more, right? Sometimes you have moonshot ideas and you want to see if like, well, is this actually viable? Sometimes you have a founder who's even like they may not even be in like the sexiest sector. There's another founder. Sam, who's got a company called Mock that's doing like super fast, super cheap stablecoin DEX, right? That's not necessarily the most exciting sector to be in. DeFi isn't necessarily the hot sector now because people feel like, okay, it's been saturated to some degree. But he's just an immensely sharp and capable founder with an awesome team that can execute, who thinks really deeply about his space. So like that's an example of a founder that like, you know, we really wanted to support and back him. So I guess like the short answer to your question is we're really looking for technical innovation, ability to execute, and a strong team that's like open-minded and teachable. I think like those are really the three primary components. When people are more on the infrastructure side, then the technical innovation matters more than like sector experience. And when they're more on the real world side, then sector experience becomes significantly more important. And once we gain comfort that the team has all of those elements and ingredients, that's great. Like that's a compelling event for us. And ultimately, like you want this team to be a $1 billion company. Like what does that look like? Do I see this founding team as being able to hire and manage and scale to that level, right? And that's a really key component as well.
Got it. Are you sometimes the first check in the company, or are you mostly
Yeah, yeah.
Got it. And if I'm asked, what is your average check size?
So now it's around 300, around 300K.
Got it.
So we're not looking to lead. Again, our aim is really to build ecosystems and to be supportive. So we don't want to be competitive with larger funds. We don't want to be competitive with boutique funds. On the contrary, we're quite close with most of the tier 1, tier 2 boutique funds in the space, and we want to be supportive of them. So we want people to think of us as like, yeah, we want BBF to be on our cap table because we know that they're going to help this team out. They're going to support them from a strategic perspective, from a go-to-market partnership perspective, and whatever they need, like they'll be there. And we don't want that it to be a zero-sum game for us. So we like writing kind of those mid-level checks. I think there is one company that we've written $1 million check for, and it's an early founder that we backed very early in his startup. He was in our first cohort, Daniel Marin from Nexus, and in his latest raise, we doubled down because we really believe in him and what he's building. And he was a very young founder who was extremely analytical and insightful, and has been able to just recruit a stellar team to build. I think I mentioned earlier, kind of this infinitely scalable ZK-proof platform.
Mm-hmm. Yeah, that's definitely exciting that you have all those, like all those things. Like you don't have to make like 10 meetings before you learn about them. Like some of the greatest talents in the world already come to you, right? So I think that's the advantage of like the establishment.
But we do have 10 meetings, right? And I think this is the challenge. So like I've got 40 or 50 angel investments like separate from the fund in the last 7 years, and you have to make an investment decision after meeting a founder 2 or 3 times. There's only so much when you're supporting them
Of course.
for months. they get to know you and trust you and really see that you're able to add value and you care about like putting their interests first. And like I was a founder, so I know how hard it is. Literally, your work becomes your life for 5 to 10 years. But on the flip side, like we really get to know them as well. We see them in the challenging situations, and we're able to see how they react, but also like support them. And it builds a much closer relationship. I much prefer investing with people at this level of depth, and this is significantly more depth than I had in any of my angel investments.
Oh, I'm sure like that you still do like and that's funny, but I also angel invest, so I deeply empathize
Yeah,
what you just said. Like I sometimes you just have an investment thesis or you go through some syndicate, so you don't like the decision is actually very like fast, right? And it's one of those like situations you're actually ready to like lose this money because you have enough intel, you have a gut feeling because of your previous experience, right? But yeah, you can, I mean, a lot of the times you cannot, even in our world, it's so decentralized, you cannot even meet the founder because they can be in New Zealand
yeah,
or like in other
yeah.
parts of the world, right? So I understand the hurdles, but uh we talked a lot about like your investment thesis and like overall the portfolio, right? We agree that we're going to talk a little bit about the layer one solutions, right? Which is I'm sure you're looking at a lot of even new emergent layer ones, right? And I know your stance on it. I want to for the people to hear about it, like, and overall, like, how many layer ones do we need? And like, why do you think it's still kind of a good idea or a bad idea to launch another one?
So I think there's broadly speaking, there's like three markets in crypto. Um, there's what I like to call like the big circle jerk, which is like uh, it's layer ones that launch. The first application that launch on them are dexes and lending platforms to trade tokens from other layer ones and layer twos, and then like other applications for like basically all of these activities, right? And it's we also have NFTs. We have like on-chain games, and kind of an entirety of like DeFi activities that revolve around access to a common set of assets and all these things that you can do with these assets. In that world where all you're doing is building dexes and lending platforms and kind of various adjacent types of applications and technologies, backwards compatibility becomes really important. But you're all going after the same use case, right? So it's like you're trying to throw money at people to by having a token and them expecting appreciation to gain adoption, but ultimately they're going to leave you when the next amount of money comes on board. Right? So it's like this set of use cases I think is very limited. It's a small world. People have made good money in building platforms for these use cases for the bulk of traditional DeFi. Not TradFi. I'd say traditional DeFi. I actually think TradFi is like something else that's new and interesting in some ways.
And some of them are
TradFi
still
coming on
continuing
board.
to make money, by the way.
Yeah, 100%. But I think it's hard to build another layer one that's going to focus on that. Now, I think my view is that blockchain is going to be at the scale of the internet. It will permeate every aspect of our lives. In that world, it certainly makes sense to have dozens of different chains that are optimized for different things, right? So if you have a chain that's optimized for AI, great. If you have a chain that's optimized for DePIN, that makes perfect sense. DePIN has different requirements and necessities and parameters than perhaps building a DEX or some sort of like fun on-chain game. So I think having specific chains that are have a specific focus certainly does make sense, and we see some chains that are looking at that, though because use cases are small, they tend to overlap, right? There's for a while, if you wanted to build in the B2B side of things, you had like Hyperledger, and then you had like Hedera, and Hedera is a super fast permission chain. Is it the pinnacle of innovation in blockchain? No, but Does it solve many like enterprise use cases really well? Yeah. Do they care that it's permissionless? It's not permissionless? No, because they've got like Google and IBM and others like running their nodes, and it's decentralized. So I think the challenge that we have, and one that I see in blockchain in general, is I don't think there's enough vertical integration and specialization for chains. And I think that's where we start to see all of this overlap. And it's like, oh, it's another chain that says it's going to be faster. I think the name of the game at some point is who's going to use this and for what, and how are you going to gain adoption. So if you have a set of users that you have a compelling story you can gain adoption for, by all means, I think it makes sense to do it. Also, the upside of infrastructure under the layer one can be super high. So right, they end up capturing a lot of value. So it's less like, do we need this money? It's more, if you're going to invest in something, you want it to capture value. And layer ones tend to capture value. So then it becomes this gambling game. Yeah, I think the flip side of the vertical integration argument is if you look at most tech platforms in Web 2, they do vertically integrate, right? You'll start with like Amazon was selling books, and then it became a platform for people to sell everything. Uber was a black car company, and then they created a platform for logistics in general, including Uber Eats and freight and all of these things. And you have that kind of like initial use case, which gains adoption in users. And then once you have you've seeded that side of the marketplace and you're actually creating value for like real value for real people, now you can platformize and allow other people to build other applications that are adjacent to that. And you continue to create value for both sides of this marketplace. I think most blockchains tend to like launch and just expect people to build. And then they'll have ecosystem funds and they'll start like funding a whole bunch of projects. Many of them don't have as much focus as I think would be useful for them. Then again, I've never launched a layer one, so maybe I'm completely wrong and it's just too complicated. But I think they end up all competing with each other, and there isn't a lot of clarity as to why should I launch on this chain other than you're going to throw money at me.
So now let's talk about like, you're a person who should think about like customer acquisition costs, like, churn, retention, all those metrics when you do diligence project, right? Now we have a situation which was like a atomic bomb, like, thrown like from Polkadot community, which I told you before. I just want to hear your opinion on it. So basically Polkadot like officially published their expenditure. They spent $37 million in outreach during the first half of 2024, targeting users, developers, and businesses. So $10 million on ads and sponsorships, 4.4 million on influencers, 4 million on digital ads. Now, if you actually go right now on CoinMarketCap and see like, the price action and like how DOT's like, performing, I would say like I'm honestly a bit like surprised. I mean, I wouldn't say it's like terrible or anything like, but I didn't see the impact of these investment. And now again, there might be various reasons for that, right? But what was crazy enough, like, that people started to notice, like, how they were, because everything was public. So in total, basically, Polkadot spent $87 million in the past 6 months. So think about it. The treasury manages $245 million. It's 38 million in dots as in assets, right? In which 188 million are liquid. So at this burn rate, essentially they have less than 2 years. Now, of course, as we talked about it before, any company can ideate, pivot, and they can like restructure and find their own way, like with a partnership. But I want to hear your honest opinion, how do you see and how would you justify like this amount of money spent on ecosystem without a great impact?
So first of all, I think impact is always delayed, right? So it takes time for people to take you seriously and to like learn about what you're doing, to actually like. There's also like, what is it? And I'm not a Polkadot expert here, so I don't want to necessarily like defend Polkadot as God's gift to humanity. But I think they've like launched Polkadot 2.0. I think the timing of that was probably in the middle there, right? So what's the launch of Polkadot 2.0?
Oh, the 2.0. No, I know when they launched that they launched in 2020, right? Officially.
Yeah, so going live April 18th, right? Polkadot 2.0 went on Kusama. So let's take a step back. So like one of the things that we were discussing offline was like there are all of these zombie chains that they're not necessarily zombie chains. Like they're chains that you kind of you're not excited about anymore. They've been around for a while. They raised a bunch of money in 17, 18, maybe in like the 21 cycle. And it doesn't seem like there's any reason to continue building on them in the first place or like for them to exist, period. Right. And what do you do? Or maybe like the tech itself didn't end up working. Right. I think it was OMG at some point, like the backers realized, well, we have a token, we have a bunch of people here who know who we are and have some brand, but we don't have an actual platform that's being used. So they like relaunched it as Boba, brought in a fresh executive team, and we're able to take advantage of that. And again, I'm not going to discuss how good or bad Boba is doing, but I can understand wanting to take advantage of an existing real estate to create value. Now, if your real estate is like languishing, and I think there are a few cases of that, like Cello, many would say was like 18 months ago was languishing, and they had some great talent. They still had a decent amount of capital, so they decided to pivot, became an L2 for Ethereum, and now they've been kind of growing pretty materially. We have what is it, Definity, right, which was like the talk of the town in 2018 when they had their ICO. Everyone had backed them, and then they were kind of like dead. No one was really thinking about them or taking them seriously anymore. They had a bunch of cash, and now they're starting to come back to life, spend hire, spend their capital, and try to revive themselves. So I think Polkadot is kind of even Solana is a perfect example. Post FTX, right? They got hit the worst from that, but they had a strong set of users that still believed in the ecosystem. They had a strong strong founders, and they still had capital, so they were able to take that and build on top of that this incredible ecosystem that now they've become the de facto standard for probably, I think, the second product market fit project on blockchain. I think the first product market fit project on blockchain was like USDC, USDT on blockchain, like payments and hedge against inflation. I think the second is meme coins, and Solana's kind of won that, right? It's people are having fun with them, and that's, you look at where transaction volumes are, and they're like, that's a significant amount of that. So I think Polkadot is taking a similar route of like, let's take our technology, let's relaunch it so that it's relevant with everything that's been going on now. Let's spend a bunch of capital on people knowing who we are and why they should be building on us. And you're right, if they keep spending like this and the price doesn't change, then they run out. But if the price go up, people are happy. And then it's worth it, and it's a self-fulfilling kind of prophecy here. Broadly speaking, I do think that we are at an inflection point for blockchain on the adoption scale, right? For a year now, we finally had chains that are performant from a throughput perspective, that are low cost from a gas fee perspective, that are usable from an account abstraction and usability perspective and kind of wallet abstraction, and that are easier to build on. We're starting to see kind of many chains that allow for you to code almost in traditional programming languages again, and have like WASM compilers, etc. So I think the intersection of all, and on top of that, you have like friendly regulatory environments in Europe and in Asia and even the US, right? But both presidents are now being more pro crypto. We had the Bitcoin ETF and the Ethereum ETF, and we're also seeing significant capital inflows from TradFi. We're seeing growth in DePIN. We're seeing real world assets kind of taking hold across South America, East Asia. So I think we are at an inflection point where I can understand why someone that has a large user base, asset base, and brand would want to take their capital and try and revive it.
Mm-hmm. Interesting. Yeah. By
Actually,
the way,
I think the perfect use case for that is Bitcoin. So all these Bitcoin L2s, right? It's like you either have if blockchain is technology plus network effects, you're either starting with new technology or starting with network effects. The hardest thing for new technology is to gain users and network effects, right? But like Bitcoin had, however many wallets are in Bitcoin, is like the largest network effects in blockchain in terms of like wallets and adoption. It just didn't have any innovation on the technology side. Now all of a sudden you throw an innovation of technology on that, and you're able to capitalize on all of these users and wallets that have been dormant there. And that's why I think there's been a ton of excitement.
Have you invested in some meme coins?
So I had not invested in any meme coin or any NFTs until about 3 months ago when I just started seeing the volumes, and I came to the conclusion that if I want to understand what is going on, like what is this use case that is a very significant portion of the transaction volumes on these platforms that I'm investing in, then I should start at least looking into it, and I did start investing in a bunch of Solana meme coins. It takes too much time. I've done well on some, I've done less well on others. For me, it's more the fun of it. I would say that I understand meme coins and appreciate them more now than I did a year ago, when I thought it was all just kind of full of hot air. But it's community building in that it's like it's social gambling with brand associated with it, right? Just like Nike as a brand has value, Pepe has value, and Doge has value, and it builds a community that then perpetuates itself. And if you can reach that escape velocity where there are enough people that are building jokes and are bought into it and kind of have held on to it, and we see similar things with like GameStop and AMC, then you've created this community that is like, no one's pretending that Doge has real value. No one's pretending that WIF has real value. It's like everyone knows that this is gambling, and people are doing it because they're on these Telegram chats and it's fun, and maybe price goes up and maybe it doesn't. So.
Got it. Okay. I had to ask you. I want to know like where you are. Like, I invested in some. Actually, some of them did really, really well. And I still remained, ironically, I still remain skeptical, like, because I thought that like for the majority of the people, like as I know, like just the the rules of the capital markets, like if somebody is winning big, that means somebody's losing, right? And I still believe that the majority of the people are losing money with them, because only the few who actually know the insider game when they're like releasing the 100% circulating supply, they buy like, and they actually control the pump. So they make obviously
Yes.
astronomical capital. Whereas people who are joining, like they think they join at the right time, a lot of them are washed out, right? So it's still like I mean, but I do believe like you're right in terms of like that this is already an essential part of our ecosystem and it
But
drives community
yeah,
together.
even there, I guess I'd argue there's like two types of meme coins. There's meme coins that really are just like pump and dump, and it's the founder, the creators of the meme coin wanted to pump and then just like basically pull the rug out from the retail traders relatively quickly, somewhere between like 40 and 100 mil market cap, and then everything goes to shit, and then people have just lost money. But also like I see people that are like actually spending months building like marketing plans to create a meme coin that they feel will actually have lasting power. Right, a friend is creating like Bitcoin, and she's not that I think it's I know whether that's going to do well or not.
I know that
Yeah,
friends.
yeah, but it's like she's spending meaningful time on it and has
Oh
a
yeah.
plan for it to be kind of a social movement around education and blockchain and women in blockchain. So like I think like there's like there's another angle, which is if people are really trying to create this larger movement, then it's less zero sum because there's adoption of like spectators into the platform, and you're kind of creating value. I think an interesting corollary there is celebrity chains, and like the chopping block folks very famously were like shitting on celebrity meme coins, and I don't know. I view celebrity meme coins as like direct interaction and ownership of the relationship between celebrities and their audience, and I actually think it's a good thing. Right now, like every platform that celebrities have to interact with their audiences are these platforms that take 90 to like 95% of the value. And if you can use your celebrity meme coin to have some sort of direct relationship with the people that believe in you, yeah, I'm all for it. Like you're a brand, you want to monetize that, and you have people, and you're able to create content and buzz and excitement. Sure.
Yeah, I would agree. I mean, at the end of the day, like, yeah, it's all about like the free will, right? If people want to support this project, they will support it anyway,
Yeah.
with your advice or without your advice.
Yeah.
Um, Look, I know we can talk for hours, right? And I would love that. I would love to keep something for the next episode, right? There's one question that I always keep completely, I would say in the dark. Like, like I wanted to be very genuine in your perception and your, revelation of this question. I know that you're a person who's also practicing a lot of different, like, spirituality, like, and other things like so. So therefore, the question is like, what is the meaning of life to you, Gil?
Ooh. Uh, I'll spin the question on its head. Um, my cousin, who was a year younger than me, passed away from breast cancer about 3 years ago, and she was one of
Wow.
my best friends, and that was the first person that I knew that I was very close to that passed away. And I thought about like what is left really. It's the things you've done and the people you've touched, right? That's all that's left. So really, life is like it's the ripples that you make to those around you. And I'm not big on this concept of like legacy in some ways or another, but ultimately, like I'm not trying to create a legacy, but I think the things you do and the moments you experience and the people that you interact with and have like deep and meaningful experiences ultimately is in many ways the sum total of your life. So to me, it's uh, to live, right? The meaning of life is to live, is to experience, to interact uh, and share life with others that are meaningful to me and have meaningful experiences with them, and to express myself and be creative in one way or another. And I think that love of creativity and creation and people is a reason why I also like, founders and building companies, because ultimately, like, you're creating these micro communities and these microorganisms of people that interact and they create uh, and ultimately, I think all of life is about people, and that's been a very strong thesis of mine from the beginning. So, meaning since I was, building my first company in my 20s, that business is about people, relationships are about people, love is about people. So, people first.
Love it. I think it's a beautiful and a very genuine answer, right? And yeah. I know that you're a
Oh,
people
thank you.
person, and accept my condolences about your cousin. Like, and
Thanks.
as we say sometimes, like, like we're all gonna be in the same place, which we don't know where it's gonna be this place, but at the end of the day, like, you're right. Everything that is left behind us is like the people who remember us with love, like we give them with emotions, with feelings, like, when they memorize us. And there's only memory of us that's left, nothing else. Statistically, in 3 generations, even that is gone. So, so, so
Yeah.
you're right. You have to be present in the moment and be very like honest about it. Like, appreciate you, Gil. Like, really appreciate your wisdom. Appreciate
Thank
your
you, Konstantin.
experience. We should do it more. And
Yeah, it's been fun.
yes. Considering we're both in New York, I hope we're going to see each other a little bit more after all the crazy conferences.
Likewise, man. Always.
Thank you, man.
All right. Thank you, Konstantin. Really appreciate it.